Yo, what's good, YouTube? It's been a minute. I just think this is a super important video to watch. And this is my friend, the trading fraternity, Josh. His channel is the Stock Market Live. He trades Monday through Friday, open to close, uh, in the stock market. And he just has some really good insight on the markets. And I just want as many people to see this video as possible. I only have a couple hundred subscribers, but hopefully you get some value out of this video. And also check out Josh's page. Really good info. But here we go.
And today was very interesting for the banks, and it was defined as a day of healing. That's why I put a band-aid on my passport, for the thumbnail too. I actually got a cool. I'm gonna show you. I got a dope first aid kit. I'm gonna show you, but it was very weird. We had a lot of activity. Take a look. Regional banks, they opened up very, very good, or at least in pre-market. Then they sold off. The big banks got a bounce, but the two main things were FRC and the Fed lending facility, and I have a very big update on that one. And then FCNCA. We've been bringing this up for 2 weeks. I got $40 a share out of it, and I thought it was good, but they opened up 53% as they were the winner of SVB's assets, and they got a steal of a deal. But the fact of the matter was, nobody blew up over the weekend. They had all these discussions in the news we gave you yesterday, and things calmed down a little bit. However, if you see the title, the stock market is breaking. That's what I want to talk about, but mainly the bond market. So shout out to ZH for this chart. But if you haven't been noticing what has been going on with the 2-year, the 10-year in bonds, it is absolutely wild. And we are seeing some of the biggest daily swings in the 2-year bond, bigger than what we saw in COVID. This was the biggest move in bonds of 2023. And overall, just what you are watching with the yields and even the yield curve, we're watching a rapid uninversion. So if you've seen any of my videos, you should know what this means. I do not take that as a good sign. I encourage you, go look up some of my other videos with the yield curve and the market crashing. But the whole point is that the bonds are moving insane. These type of bond moves, they don't just happen. And even when you're watching now the banking situation calm down, speed up, no news is good news, then an event comes out of nowhere, this is a huge telltale sign. Now, I will preface it with this. At the beginning of the year, the bonds were saying something, and that completely changed. So nothing is certain, but the moves we are watching on the daily with bonds right now, they are absolutely insane, and this is probably going to be our next biggest risk. So there's all that, but let's get into it. I hope you like the video, but I want to share a theory with you now. And also, I want to give you this pretty picture because I think it'll help you understand some things, or how difficult and how much things have changed so far this year in 2023. And this is looking at CTA performance. And this means those algorithms and all of these crazy funds that use any sort of algorithm trading, they have actually had one of their worst months or years so far ever. So the point is, everybody is getting rocked right now. It's actually, I feel like you had more losses and you felt the pain more last year, but this is just to highlight how quickly things have flip-flopped. And that's why I'm saying now we got to be watching out for the bonds. But let me tell you my theory here. Like I'm telling you with today, we're calming down a little bit. The fact we had no news, that helped calm some people down. But now why? What was the big thing? Yes, FCNCA, First Citizens, that definitely helped out a lot of the indexes. But that news over the weekend that regulators are considering an expanded emergency funding facility, that is absolutely huge. I really want you to understand that part of what you got today and watching how the market played out, a big part was simply you got another day of Fed intervention, whether you realize it or not. And now this is what I want to bring up to you, because I told you, wait for the solution, then wait for it to fail, right? This may be that moment. We're going to watch how it plays out, because that moment could happen immediately or it could take a couple of months. But now with the whole FRC thing, here is the key to all of it. That news last night helped bring up the market. It got people excited even all day today, but they are still working on what option to select, aka regulators had a discussion and that's it. They didn't tell us what they were going to do. We don't know how they're going to expand the emergency lending facility. We don't know if they're going to give any other option to FRC. We don't know if it's going to lead to the balance sheet moving. All of this stuff, and this is what I want you to look out for, because this is probably going to be the next step. There's really two outcomes that come from here. If they announce something related to FRC or expanding these facilities, if it's broad and wide sweeping, that could have a positive effect. That could be that positive development we are looking for, and everybody's looking for the positive development. That's why we go up when there's nothing. But on the other side, given how we're reacting today, it's kind of cooling some things down. If that comes in and the option selected is not as good as people are pricing in, that might actually be one of those failed events, and then we see where we go from there. So this is going to be really important. I highly suggest that you monitor this. This is what I am going to be looking at. And now on top of all of it, let's see how tomorrow plays out, because we might actually get 2 days in a row of decent bank relief. Over the last 3 weeks, that really hasn't happened. It's either been upset by some level of news, another bank, or even as it's looking good into the end of the second day, we start to sell off. And you did see a little bit of that today, but that's what we're looking for. But overall now, seeing where it is, I'm sure some of you got banking fatigue, tired of hearing all this. A lot of people don't understand it day after day. As long as something doesn't get worse, it's kind of like wearing people down. But we just got to see, is it able to actually pick up? And now 2-3 days of not hearing anything, that will be a big change on the month. The question now, though, is do the bonds relax? So this is the next thing of the theory, or really just to explain it, we went over this today, but I really want people to understand why this is a problem with the banks. Again, how it started was a bank run by uninsured depositors. It wasn't the small money all leaving in a traditional bank run. People got worried. The people above 250,000, they are considered uninsured. They are the ones that caused the bank run, right? And it's been massive, billions and billions of dollars. We found out today this was like the first outflows of regional banks in like since 1980 or something like that. But the point I'm trying to tell you is that it's not really as bad if a bank fails. Obviously, that's not good. But what is the consequence? What happens after a bank fails? That is what you should be worried about. And it is a credit crunch. It's literally credit drying up, people not being able to loan to each other, people getting nervous, changing lending and investment habits. That is not good. And that is the next thing here. And that's why I'm telling you, watch the bond market, because these back and forth swings that we are seeing, it's a sign of weakness, a sign of vulnerability. But now tying this into a potential credit crunch and credit freezing up, that is really where we need to be watching. So other than that, though, it's going to be very simple. We got to see how tomorrow plays out. Do we have the second or third day of bad banking news or good banking news, or do we kind of get a surpriser? So keep your eyes out for that. We do have data. And now the final thing, just to give you an idea of the week, because today was very slow. It was even an extremely low volume day. It was pretty wild, but what you got to be watching for now is the next set of events. Like I told you, we are ending March right now. There's going to be a big quarter rebalancing on Friday. We are also getting the PCE. That's going to be big. Even tomorrow, you're getting Conference Board of Consumer Confidence and a bunch of real estate data. And I think the Richmond Fed too. And we even had bad Dallas manufacturing today. But that's not the point. PCE will be big. Let's see how the week of healing goes for the banks, or if it turns into a whole week. But now, next week, April 7th, that Friday, I believe the market is closed. So I don't know how we're going to get the data, but that is the non-farm payrolls. And then on Tuesday after that, you get the CPI, and then before you know it, earnings starts 1 week later. I know we just finished with earnings, but you got the big tech coming up. But that's what I'm saying. These are probably going to be the things that start moving us, and this is now where the bonds and the banks and everything, a lot of things are going to collide, and then it culminates with May being the Fed meeting, and that's the final thing. What I'll tell you today now, we brought this up, the Fed futures, there's a lot of time on it, but now the current debate that's going back and forth, do we pause or do we raise rates? So as of yesterday, Friday, week before that, the Fed futures were like 80% that we pause. Now after a little bit of relief, you're watching that number go back up. It's kind of 50-50. And this is where we're going to go back and forth, because now what happens? Banking situation cools down. Does everybody immediately start reacting to Fed policy? That stresses out the situation, or freaking out with inflation and all of that. So it's going to be wild, but overall, this start to the week, it's an interesting one. Not too active. Our work is cut out over the next couple of weeks, and now we got to monitor this situation, see what the bonds are telling us, and now find the follow-up for FRC and see what happens. So that is everything as far as plays. I averaged down on EBS for the PDUFA. I grabbed Square for a flip today. And then I got IOVA 100 shares, I think at $6. And again, none of this is a recommendation. They had good news relating their cancer drug leading in to their drug approval. They're not a drug approval. But other than that, still riding out. I am still trying to go neutral. I did make plays today. I know it's getting weird, but we're going to watch how it plays out. I'm still kind of focusing on neutral. That Chop City and unexpectedness is playing out. So we'll see where it goes from there. But other than that, taking it little by little, ride some of this news and being patient. And really, if this volatility offers me an opportunity to get them cheap, you're probably going to watch me scoop those up big. But as of now, there's still an element of fighting the Fed, and nobody knows. So I hope you're ready. But Chad, that is your watch list. Drink that water. Stay hydrated. Stay healthy. We better see you on stream tomorrow. And remember, you are made for this. You got to take it 3 more months, but let's go. Pick up the mat and walk. You want it? It is yours. Bring it home, Chattadonia. And God bless you. And be on the lookout tomorrow for the members on the YouTube. Yeah, guess what? I got something for you. On the youtube.com/stock market, we got a daily thread in the morning. I need your help with it. All right? You got me? I got you. Oh, yeah, here. Let me show you. Bro, this that first aid kit, man, from Costco. Look how intense this is, bro. It got antacid. I don't, is it antacid? Is it an antacid? Okay, you know what I'm saying. But, like, bro, look at this thing. Okay, all right, I'm going to go. I thought it's cool. You should get one.
So I hope if you saw this, you got some value. Josh has tremendous insight on the markets, and I just wanted to put this video out there for anyone that is interested in stocks or macroeconomics. Yeah, I'm gonna keep doing more reaction videos of other people's videos and Josh's videos, just because I think they're super valuable. But I mean, if you made it this far, hope you had a great day. You do you. Stay blessed, stay humble, and until next time, peace.